Alright, I'm back, and today we have xauusd. I believe this to be the London gold and using a USD currency. So with no further ado, I have data dating all the way back to August, I think 2010, or a little bit before, July 2010 or June. And that doesn't really matter. We're just gonna give myself my black area here, like moving the margin. Gives me some room to think and just imagine what could happen. All right, let's do old school. I'm gonna start by the back. Zap back and see what happened back in. Okay, just gonna click that. All right, here. Remember these are monthly candles. So 1, 2, 3, 4, 5. 5 months consolidation, sideways action, and after that we have a breakout. Could have been this one, maybe. You could have said that the breakout candle is this one. And measured move, top to bottom, add it to the breakout line. And rapidly you would have entered here, sell stop here, and you would have exited the following month. What happened after that? Well, you got some more consolidation. Here's some resistance. And well, only one candle for the support, so I still not A++ setup. Probably on the weekly you'd have more candles, and this would have been better traced out, giving you a clearer classical chart pattern to play. But since we're on monthly, we need to wait more time, more candles, and to have A++ setups, to have a stronger probability of reaching our possible targets. Let's see what we have here. We had a top around 1830, and months go by, and then we seem to have some clear resistance. Support here, sorry. So we have a resistance here at these two candles high, and we have another line of support here, a resistance here, and support is pretty clear that's here. All right, let's move on a few months and see what this is a nice pattern though. This is consolidation since July 2011 all the way to July, like 1, 2, 2 years, 3 years consolidation. That's a nice top pattern or continuation pattern. We'll soon find out. Adding some more candles. Oh, there we go. All right, so now we have the breakdown line right here at 1557, 1550. And there we go. Bam, we have candle, breakdown candle. So how would we have played that? Top to bottom, add it to the breakdown line. Sometimes when I have patterns like a pattern, a smaller pattern within maybe a bigger pattern, maybe this is in a descending triangle, and I always try to go for the pattern closest to me. I give it more validity, and its implied target, it's usually going to be closer than the bigger encompassing classical chart pattern. I think I have more chances of reaching a possible target that's close than a possible target that's further away. So this would give me that target. Entered right here, 1477, sell stop here. That's your risk. The delta here, if you get sell stop, you have to manage the size for that to not be more than let's say 1% of your total NAV, or whatever your money protocols are. It could be 0.5%. That's not unseen, and just try to keep it small there in case this goes back on you. Is there bearish divergence with the RSI? That don't have that many candles, right? They're spread out, so And no, there's nothing there. So lower lows on the RSI, lower lows on the price action, all good there. And that target coincides with some previous support, or just a little higher. It still will have to go through what I call a wall, is a previous resistance turn support. So the price action, that target, what I don't like about it, it might go through there. And, well, as you see with this wick, it already did go through it. And it got retraced, refuted back there. So this A++, probably not, because of that long wick, that that the price got refuted all the way back. So the target might have already been reached. And I'm not quite sure if I would have entered at that point. Let's see what happens in next month. Goes down, okay, and target reach. And the target did get reached. No problem there if you would have been in. And but if you didn't consider this A++ setup, no shame there. There's other setups where you could feel more confident, which respect more your trading framework and criteria to enter. No problem there. And you would have seen here the 1% risk. If you add it to where you would have gotten in, it's only a risk to reward 1-to-1. Not good for an A++ setup. You want at least 2-to-1, 3-to-1 ratios. And so if you lose half of the time, at least you make some money. If it's 1-1 and you lose half of the time, you're just gonna get you're not gonna be moving. You'll be doing some on place skating. All right, so now the price action, you would have been out. Price action continues to go down, and we seem to have a bottom forming out here. I'm wondering here if this, you see this target here? No. All right. You see charts sometimes, JPEG, post on the web, all the nice lines, everything, but sometimes I don't know how other people do it, but the thinking out and the actual drawing of the lines, it's not always pretty, right? It's not a science where 1 + 1 is equal to 2. Yeah, your brain has to see the patterns with experience, etc., and then you draw the lines. It's not uncommon for me to redraw all the lines, and because I missed something, I missed a candle, I was thinking about something else. There's a whole bunch of reasons. All right, so a few candles are getting drawn here, and this could be either a bottom for a retrace back to previous breakdown. Add the measured move right here, brings us pretty much here to where the breakdown was. Or we could have an eventual breakdown, but right now we're a little far away from that. Breakdown scenario would be here. So let's see what the future happened. And we're still consolidating. I like that. 4 months in. The longer it consolidates in a tight formation, the stronger the move out. Oh, it's a breakdown. It could be a breakdown. It probably is. And so now we have our valid target here. And risk reward seems to be a little bit better. Sell stop here, short here, buy stop here to get to stop your losses, and profit stop right down here. So that seems to be a risk to reward. If I had that little, it's gonna be hard. So it's about 1, 2, 3, 3-to-1 risk reward ratio, pretty good. All right, let's see what happened. No. Oh, okay. So that was not a breakdown. I had a few tests here, and that's why you have risk management. Only lose 1%. Here, right here, would have been triggered out. Lose your 1%. You move on. You wait for more candles to pop, and the chart is going to morph into something else, or it's going to extend. And you see now that my real resistance is actually a little lower. So that's how it evolved the market, for whatever reason. It decided that that's the resistance that the people are willing to pay. So right now the range of my of that consolidation rectangle has morphed, has changed. So now new targets will arise in the eventuality that we have another monthly candle crossing over that support or resistance breakdown lines. And wow, more month. I didn't remember that consolidating that long. And right here we have another. Let me extend those lines. Try to get as straight as possible. You see, closer term right now. Somebody playing on the weekly would have probably seen this range, a little tighter range, and that could be good launching pattern for maybe a eventually bigger breakdown. Or this also could be. That's why sometimes I say redraw my lines, because as time has moved on, you have to forget about maybe this resistance. But the actual pattern that we're dealing with is more this range right here. So that would be a more conservative target if ever there's a breakdown, and a higher probability of reaching that. And breakdowns right here. So you would short here, buy a stop here to get to stop your losses, and profit buy stop right here. See what happened. Price action goes. Oh no, another whipsaw. So you see 2 in a row now. And that is, again, the biggest reminder why you always have to put your sell stops. And this range is still valid. What's actually, see, if you take a step back, what's been happening now is we have a. Oops, stop that one. We have it looks like a descending channel somewhat. All right, let's keep on moving. Right now, I've been triggered out twice in a row, 2 losses, and I let the months go by. No worries here. Maybe some intermediate patterns. Yeah, this could have been another breakdown. See, this is probably that same breakdown candle has reached its target. Probably on the weekly or month or daily, you would have had enough candles to be able to see a pattern and get in on time. But right now, that candle is a breakdown below the 1158 line, but the price action went so down that it already reached its target. So that would have not been playable under my trading framework. Here we go. We're starting to trace out. Oh, I'm going to remove all the lines. Remove all trend lines. Getting way too messy. And do we still have that descending channel? We sure do. And right now we're out of the descending channel, and we're approaching previous support and resistance. And it's tracing out. All right, there we go. Starting to get in the clear. So now we're broken out of the descending channel, and we seem to have a nice launching pattern right here, bottom formation. There's one thing though I didn't check when we had those breakdowns here, where I removed all the arrows to verify with the RSI if there was some divergence, and that could have probably saved me from pulling the trigger to bring down. If there's bearish divergence to the RSI, usually it's not an A++ anymore for me. It becomes an A+ or lower, and it's always open. I forget to check right now. But on my checklist there, I'd have to come back to it before actually pressing that important buttons right here there to activate the trade. All right, so now let's say my resistance is right here, and my support is right here. I could say that there's a breakout here on the way to a target which coincides with some previous support now turn resistance. Right here, you got to be careful. So even before, so I would have liked to have a target that would bring me to 1563 like this. Not that this target is not valid, it's just that I'd have a higher probability of reaching that target if we're just under. Let's add some candles, see what happens. Oh, no, price action goes down, and we've been triggered out again. Wow. So either I'm misreading these, or it's just the chart just needs more candle to morph. And where are we now? Oh. Okay, so it's in a breakdown. Add some more candles. Still ranging, still ranging. Now even bigger bottom formation. And oh, that's where we are today. All right, so now it's even more traced out. And we could see here that our target would be, if I want to play conservatively, it would be right here. And what I like about this target is that it's right below this concept where I call a wall. Previous resistance turn support, or previous support turn resistance. And that I would feel comfortable playing right there. If I had a monthly candle close above the 1350, I'd be happy to play that. The RSI, no divergence, higher highs, and if it breaks out, it's going to be higher highs. This is it. All right, so it's even better. We have a multi-year 1, 2, 3, 4 years bottom formation, and it looks good for now. Yeah, have to be, and hopefully this risk to reward is going to give me, it's going to be enough to remove all those few losses there I got back then. Excellent. All right, we got through this. And I wish you a very good day, and see you soon. Bye.